With us, we grew about 15% actually, but there were some in the food group. As you notice, last year we had many more stores in macro, and this year we have only 4 stores remaining. So we have a, let's say, a gap in the construction and all, converting those stores. But in general, in the supermarket business, it's very regular. It's still we are going more and more into the fresh area, and the grocery section is still growing. Um, so overall, I think we are still very optimistic until the end of the year. Last quarter is always very bad, very good. Sorry, very good.
For the DAP store, I think the three stores that we renovated, Iloilo, South Mall, and Davao, no, brought is already bringing in the sales that we expect. In the third quarter, also we were quite promotions driven. We had a lot of promotions, and people really flocked to our stores. And we think that this is a good business model to begin with. No?
Maybe I can add one more. The reason one that we converted a old macro to become a hypermarket in Imus, the sales grew more than 200%. So compared to the macro setup before, so we are optimistic. Supermarket is still estimating about 20, 30 stores. I don't know the department store.
Uh, it's between 4 to 5 department stores next year. Four. 4 or 5, depende if we can catch up on that.
More detailed breakdown of this capital expenditure for next year. How many shopping malls are we talking about? Uh, New stores and that would be renovated. How many are will be spent in China? How much will be spent in the Philippines?
Okay, for the malls, we're looking at about 12 billion for the Philippines and about 9 billion for China. We will open one mall in China, as shown by Cora a while ago. In the Philippines, we'll open about 3 malls plus 2 expansions. But the budget of 12 billion actually is not just for the 3 malls. It actually includes the initial spending on the bigger projects that we're doing, like Cebu, the SRP project, and also the Taguig, which we will open in early 2013.
For SMDC, the CAPEC earmarked for next year is, to be exact, 20.7 billion. Out of this, around 4 billion would probably go to land banking, and the balance of 16.7 billion will go to the completion of our ongoing projects, and partly also for the startup of the other projects that we will be launching next year. If memory serves me right, we have around 16 projects ongoing right now. Each project has several towers, so these are in phases now, and some of them are what we would call expansion projects. Next year, we're targeting to launch another 4 to 5. So all the capex for next year will go into these 21, 22 projects plus the land banking.
Basically, the hotel's capex is going to be dedicated to the construction of Park Inn Hotel, as I mentioned earlier, in Davao, and also the initial planning for the Radisson Blue in Mall of Asia, which is we're targeting about like 3 to 4 years from now.
Well, in terms of SM Land, we're looking at the Pico de Loro investments, as well as maybe launching 1 or 2 new projects next year. So that will complete the capex for the real property.
We were looking at 1 billion capex, half of it in the branch expansion and another half in the estimated for the upgrade of our computer systems.
Mr. Shaw, how do you intend to fund this? Well, that's more than a 25% increase of what you'd be spending this year. So how do you expect to fund this?
I thought you are from investment bank.
Yes,
You're
sir.
asking.
I wish I am. but-
Apply na ko sa iyo eh.
No, I wish so.
Pero you look at the balance sheet of SMIC consolidated, no? At 54 billion, we have almost 40 plus billion of cash, no? In other words, with us, assuming there is no funding going out and borrow money, we can internally fund all this expansion program. But for managing of our balance sheet, various ratios like that, when the opportunity comes and the right timing, when the market improves, then we will go out either debt or equity raising of funds. No? Our budget calls for 2/3 will be internally funded, and then 1/3 of that will be funded externally through borrowing or from equity issue, or a combination of the two, meaning to say it's convertible bond. No?
So you'd be going abroad in December to start planning all of this?
When the market says so, if tomorrow somebody calls me, ito, meron na ito, mura lang pera ito, then we'll get it. No? Meaning to say, we wait for the right opportunity. There's no rush for us on this thing.
Yes, sir.
In terms of diversification, no, that is basically we're still would like to concentrate on our core business. Again, when we got into Atlas, it was for our portfolio investment. We see it as a good opportunity to be part of at Atlas, and you've seen we had last week our stockholders meeting, and I think the response was quite good in terms from the stockholders. They're happy to see that the company is in order. Now, majority of our businesses will still stick to our core business because that's one thing we think we know best and will stay there.
Easier for inflation. Should we expect some margin expansion to help the ROE? Is that a reasonable expectation? Increasing the price? Yes, sir. The costs will rise more slowly. Meanwhile, you have some pricing power because of the brand of SM. Does that mean that are you expecting some margin expansion for you?
Our side, we are expecting stability on the margin, okay? Because basically, I think the challenge is not on the merchandise. The challenge for us now, especially, is utility cost. Electricity cost is the one growing faster than merchandise. So we should be a little conservative on that portion.